Hey everyone, welcome back to Corporate Dakota. Today we are diving into a report from CMS Energy. Will it be shocking, boring, or maybe a little bit of both? Stick around to find out if this energy company is powering ahead or running out of steam. CMS Energy just announced some updates on a tender offer, meaning they're trying to buy back some of their debt early. But wait, there's more. They also increased the amount of money they're willing to spend on buying back that debt. Let's decode what this all means. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. First, let's get our bearings. This report is called a Form 8K, and it's basically a snapshot of important events that a company wants to tell investors about quickly. The date of the report is June 18, 2025, meaning everything we are talking about happened around that date. The company we're looking at is CMS Energy Corporation, a Michigan-based company. You'll also see their file number and tax ID, but honestly, who cares? This report is about something more interesting than legal details. CMS Energy has different kinds of stocks and notes, which are basically promises to pay back money that are traded on the New York Stock Exchange. It is CMS, CMSA, CMSC, CMSC, and CMS PRC. They all have their specific features, but the main thing is they all allow people to invest in the company. All right, let's get to the meat of the matter, the interesting part. CMS Energy released some news about their tender offer. A tender offer is where a company offers to buy back its own debt, in this case bonds, for a certain price. CMS Energy offered to buy back some of Consumers Energy Company's bonds. Consumers Energy is a subsidiary, meaning a company controlled by CMS Energy. These are bonds that are due in 2060. Initially, CMS Energy was willing to spend up to $125 million to buy back these bonds. This amount is called the aggregate tender cap, but they changed their minds and decided to increase that amount. CMS Energy raised the total amount to $147,095,000, so they're willing to spend a bit more to buy back these bonds. This could be because they think the bonds are a good value or because they have extra cash on hand. CMS Energy expects to buy back bonds up to that new higher limit. They expect to complete the early part of this buyback by June 23, 2025. That means they are moving quickly on this offer. The press releases attached to this report have more details the company is proud of, but for the most part, it's all marketing. The important details come from the report itself. Finally, there's a list of exhibits which are supporting documents. These include the press releases we mentioned and some technical data. Now let's step back and think about what this all means in plain terms. CMS Energy is trying to manage its debt. Bonds are a way for companies to borrow money, and buying them back can be a way to reduce debt or take advantage of market conditions. Increasing the amount they're willing to spend suggests they're serious about this. So what's our take on CMS Energy? Well, this tender offer and the increased spending limit could be signs of financial strength and good planning. They might be taking advantage of lower prices to reduce debt at a discount. Or they might simply want to clean up their balance sheet, make themselves look financially healthy. The main strength, if it's a strength at all, is that there is potentially smart use of cash. This deal will probably save them some big fees in the future when those bonds would have become due. The weakness is if it indicates they feel their stock is going to go down in the future and would rather buy debt instead. One risk to watch out for is that these kinds of financial maneuvers can sometimes be a distraction from the core business. We need to make sure CMS Energy stays focused on providing energy to its customers. In conclusion, CM Energy's tender offer is a small but potentially significant move. It could indicate financial strength and smart debt management. But remember, financial moves are just one piece of the puzzle. The real test is whether the company can keep growing and delivering energy to homes and businesses. Alright, that's our breakdown of CMS Energy's latest filing. What's your take on these moves and what they indicate for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.